I bet 90% of investors don't know this, maybe even 95%. I'm going to tell you how the stock market actually works and how to use that knowledge in order to be able to get better investing results. Imagine a beautiful village with 100 people. One day, one of them decides to open up a new business. Let's make it a bakery. The owner is doing well, and even though he is making a profit, he needs more money for whatever reason. To cover a large bill, to do more marketing, or to add extra staff. 30 brave, forward-thinking people in the village see an opportunity and are happy to lend the baker money in exchange for a small part of the ownership of the business. Let's say they each pay $10 per share. Supply and demand. The price of our bakery shares is determined by supply and demand. If the bakery makes more money, the shareholders will be very happy, especially if they get paid a bit of the profit, and then they're not likely to want to sell those shares. So reason one for a change in the supply and demand: dividends, a payment of a part or all of the profits to the shareholders. So new investors would need to offer a little more. Let's say the original investors get $1 every year as a profit payment. If that payment comes in December and it is January, I have to wait a long time. But if someone approached me today and offered me $11 for my shares, I could get the dividends today and wouldn't have to wait a whole year. And the new owner knows that if they keep the shares for 1 year, they'll get an extra $1. If they keep it for 3 years, they will probably make $3 extra. Though it could be more or less depending on how well the bakery does in the future. Or the price of the share may go up by $2 in the next 3 months because more and more people in the village start to see the opportunity and want to buy shares. Other reasons why the price might change. Economic conditions. If more people move to the village, the bakery is more likely to make more profit. But conversely, if all the young people see no future in the village and can't get jobs, then they are likely to leave and the bakery has less clients and likely to make less profit, which may cause people to want to sell their shares, even if they make a loss so that they can invest their money in something else with a higher return. Therefore, the price might go down. So in order to be able to invest in something with a higher return, they might put their money into a different business or a term deposit at the bank, known as a certificate of deposit in America, or they might put their money into bonds.